Don't download Groundfloor investing app before watching this. If you're thinking about downloading the Groundfloor investing app, stop and rate this first. Most people misunderstand how Groundfloor works, and the surprising truth is that it's not the risk-free real estate investment platform it seems to be. Groundfloor allows you to invest in short-term real estate loans, often with low minimum investments as little as. You can fund loans to property developers and potentially earn high returns, sometimes between 8% and 14% annually. On paper, this sounds attractive, especially compared to traditional savings accounts or bonds. Here's the catch: these investments are risky and not insured. Groundfloor loans are secured by property, but there's no guarantee you'll get your principal back. If a borrower defaults or a project fails, you could lose money. Historical data shows some default rates, and while many investors earn solid returns, others experience significant losses, especially during market downturns. Liquidity is another issue. Groundfloor investments are not easily sold on a secondary market. Unlike stocks or ETFs, your money is typically tied up until the loan term ends, which can be 6 to 12 months or longer. This makes it unsuitable for anyone who might need quick access to cash. Finally, fees can eat into returns. While Groundfloor's platform is relatively low cost, origination fees and servicing costs slightly reduce your net gains. Understanding these costs is essential for accurate profit expectations. In conclusion, don't download Groundfloor investing app if you're looking for safe, liquid, or guaranteed returns. It's best suited for investors who are comfortable with moderate to high risk, understand real estate lending, and can tolerate illiquidity. Knowing the risks before investing will protect your capital and set realistic expectation for returns.